Welcome. Welcome to Liquid Fortune. Today we are diving into how whole life insurance can be a powerful financial tool, not just for life coverage, but also to help you save money, pay off debt, and even reduce your taxes. Sounds good to be true? Well, let's break it down. Whole life insurance is a type of permanent life insurance that builds cash value over time. That cash value grows tax deferred, meaning you don't pay taxes on the growth each year, just like your 401k or IRA. Let's talk about taxes. Well, here are a few tax advantages you get with whole life insurance backed by the IRS rules. It's tax deferred growth. Under IRS code section 7002, the cash value inside a whole life policy grows tax deferred. You don't pay income taxes on that growth as long as the policy stays in force. Tax-free loans under IRS code section 72E and 7702. You can borrow against your policy's cash value, tax-free, as long as the policy isn't classified as a modified endowment contract, which is called MAC. Okay? You're not withdrawing money, you are borrowing against it, and there's no taxable event. Okay, tax-free death benefit under IRS code section 101A. The death benefit is generally tax-free to your beneficiaries. That's a big deal. Your family gets the money, not the IRS. Here's where it gets exciting though. Once your policy builds cash value, you can take out a policy loan and use that to pay off high interest debt like credit cards or personal loans. So for example, credit card debt at 20% interest and your policy loan at 5 or 6% interest from your whole life insurance. By paying off the higher interest debt with a lower interest policy loan, you reduce what you're paying in interest every month, freeing up cash. You like that, don't you? Most people think it's either save or pay off debt, but with whole life insurance, you can do both. Your premiums help fund a cash value asset. The cash value continues to grow even when you take a loan against it. Okay? You pay yourself back, not a bank. So while you're using the money to pay down debt, your policy is still compounding in the background. A few things to keep in mind. Make sure your policy is properly structured, not a MAC. Loans must be repaid or they reduce your death benefit. You need several years of funding before the cash value is big enough to borrow from. So whole life insurance isn't just about leaving money to your heirs. It's a living financial tool. You can grow wealth, cut taxes, pay down debt, and still leave a legacy. Pretty powerful, right? If you find this helpful, hit the like button, subscribe, and comment below. If you want me to break down how to structure a policy the right way, and remember, it's not about how much money you make, it's about how smart you are with it.